Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. Looking at the markets right now, 25,600 above that level is what the Nifty is trading at, almost near the day's highest point, slightly just off bit that day's highest point. But yes, a good day coming in for the markets. Broader end of the markets, that's also performing well, better than what the benchmark indices are doing, especially the Nifty small cap. That is also doing, holding on to gains of more than 0.8% of 9/10%. Day's highest point is what the Nifty small cap is trading at as well. So yes, a good day coming in for the market, especially the broader end, and advance decline ratio today clearly in the favor of advances versus declines. But this is a show where we solve all your stock related queries, and to do just that, we have our experts joining in with us, Ashish Kyal of Wave Strategy Advisors, as well as Parthiv Shah of Tracom Stock Brokers joining with us to just do that. Ashish as well as Parthiv, thank you so much, and good afternoon to both of you as well. Let's get started with the queries for the day. We have the first query that's coming from Himani Khandelwal, who's writing to us from New Delhi. She's holding 100 shares of HAL. This is at a price of 4,122 rupees per share. So HAL, obviously, they're making a profit on this one. And they're holding 120 shares of Route Mobile at a price of 1,097 rupees per share. They're making a loss here. Now, wants to know whether to continue to hold both these stocks or look to sell this one. Parthiv, your view coming in on HAL as well as Route Mobile. HAL, obviously, the defense play is paying out right now. And, we've seen the run-up coming in. So does it merit actually booking out your profits for HAL? And Route Mobile, what's your outlook?
Good afternoon, Vinny, Ashish, and viewers. Firstly about HAL, I think if you look at the long-term trajectory from here, and I assume that the investor is having at least a horizon of another 3 to 5 years, I think one should definitely hold on to this counter. In terms of valuations, it is at around 38 times trail multiple. But if you look at the execution track record of this company and how they've scaled up the order book, I recollect last year, I think the order book was somewhere around 1,10,000 crores. And today, as we talk, the order book is almost 1,80,000 crore. And the management did highlight in the con call that, they have order book pipeline of another 1 lakh crore in the offing. And more importantly, I think the government's focus not only to focus on domestic orders, which is what we call as B2G orders, but also focusing a lot on the export-oriented orders. And the very fact that even from the European Union, we saw they want to up their defense budget from 2% to 5%, I think brings in a lot of opportunity for companies like HAL. I think the issues related to the tech transfer, related to the engines for the LCA, I think seem to be getting resolved, and I think there shouldn't be any problem on that front. But going ahead, looking at the various other products that this company is making in the defense space, I think the future is very bright. And also, we like the fact that they are nibbling also into the aerospace vertical, which also could be a big vertical going ahead. The execution and the management so far has performed very well despite being a PSU, and one of the rare defense PSU where the working capital cycle is little comfortable. So we certainly like this counter for the long term. Route Mobile, I think we are not very upbeat. There's a lot of competitive intensity coming up, and the company has not been able to deliver good results. So I think it's an avoid from our end.
Okay, Route Mobile is an avoid, while HAL, you're positive on this one as well. So Route Mobile, you would say, is just get out of the stock, and HAL, they can continue to look at it. Ashish, your view coming in for both the stocks as well, HAL as well as Route Mobile. Route Mobile specifically, given that last 6 months, it's just seen a downward trend. Is there any hope on the technical front that now maybe a bit of an upside is possible?
Hi, afternoon to you and all the viewers. If you look at Route Mobile, I think you rightly pointed out we have just seen a downtrend, and there is no technical reversal also that we can see. If you look at the weekly chart or the monthlies, even on the short-term daily chart, the stock has been struggling. At every rise, there is a sell-off that we can clearly see. So I think it's better to be out from the stock. There is I think it's better to be into some other companies, or to name a few IT companies, something like a Birlasoft will be much better than a Route Mobile right now, and be out of the stock. As far as HAL is concerned, we can clearly see the stock has shown a very smart move from 3,000, now trading around 4,860 levels. The overall undertone is bullish for the stock, and we have seen some kind of short-term pressure over past few days. But I think that can be just over short term, and eventually the stock should move towards the level of on the upside towards 5,300. And also we are seeing some relative outperformance coming in from these defensive names again. So it's better to be holding on to HAL. 5,300 can be the target. And on the downside, maintain a stop loss for the stock at around 4,670.
Okay, keeping an eye on those levels over there for HAL and Route Mobile. Next query for today is coming from Somen Bera, who is writing to us from Jaipur. He's holding 15 shares of Indigo Paint and at a price of 1,150 rupees per share. So right now also the stock is trading around the buy price. Wants to know whether to hold or sell. Parthiv, so much has happened today in the world of paints. We've seen that consolidation going on, increase in terms of competition that's coming in from Birla Opus as well in the last year. Now, does it merit actually holding on to Indigo Paints, or maybe just move to the leaders in the paint segment? What would you say?
I think this is one sector where not only the deal that we heard today in terms of the AkzoNobel with the JSW, the deal size being almost 8,800 crore. I think we expect more consolidation to take place in this sector. And Indigo Paint seems to be one such company because, if you look at the fragmentation of this sector, now there are top four players being Asian Paints, Berger Paints, Birla Opus, and now JSW Paints, because JSW Paints before this acquisition were already doing a 2,000 crore top line. And we believe that likes of smaller players like Indigo Paints, who initially did well, they had a differentiated product strategy, but have been really struggling of late. So there is a possibility that such smaller players might be nibbled by the bigger ones. So that's the only hope. But otherwise, I think looking at the industry's competitive trend, I don't see a reason why Indigo Paint should also maintain the current multiple that it is getting. So it's a difficult call, but this entire sector will face some challenges because of the current competitive intensity. So I would suggest an avoid on Indigo Paints.
Okay, avoid on Indigo Paints. That's a view coming in from Parthiv. But, Ashish, your view also would be avoid. Should the viewer look to sell right now, or what should they do?
See, if you look at the entire sector, as Parthiv also rightly pointed out, whether it being Indigo Paints, Asian Paints, everything has corrected very sharply. We can clearly see that. And having said that, both Indigo Paints and Asian Paints, both compared together, I think it's better to be with the large cap name, because if a recovery has to happen, I think the large cap will play out much before then the mid cap and the small cap paint industry can start recovering. So my suggestion would be to avoid Indigo Paints. But at the same time, Asian Paints can possibly form a double bottom kind of a scenario where the stock is quoting at the levels which we have seen near in the year 2021. It is near at those levels again, and it's trying to bounce back from there. So there is a possibility that one can start nibbling across Asian Paints at the current levels, and we can aim for around 2,600 and eventually much higher levels in this stock.
Okay. Can look at other paint companies rather than this one actually right now, given that the sector is going through so much of a change and churn. Next query for today is coming from Pavan Mandala, who's writing to us from New Delhi. He's holding 1,000 shares of Ask Automotive, and this is at he got it during the IPO, so it is at around 282 rupees per share. He's been holding it for the last couple of years since the IPO time. Wants to know whether he should sell or book out his profits, is what he's indicating, or continue to hold the stock. Parthiv, your view coming in for ASK Automotive. Should they continue to hold this now, given that they've almost doubled their money?
Yeah, I believe the company's pedigree is very strong because it is one of the largest manufacturer of brake shoe and advanced braking systems for the two-wheeler guys, and they almost have a market share of 50%. So I think they have a very good OEM share and also in terms of the replacement market. So the fundamentals of this company seem very interesting. No doubt there will be regulatory changes even hindering the two-wheeler auto ancillary players. And we believe Ask Automobile has the capability of kind of upping its ante in terms of the regulatory hurdles that come up. So I think being the market leader and having such good relationships with the two-wheeler OEMs, and more importantly, after a very long time, we are seeing the two-wheeler space kind of doing reasonably well. No doubt there is market share shift. People like TVS Motors are taking more market share. But overall, the industry, though tepidly, but is now showing green shoots of growth. Plus, we believe that post-monsoon, I think there should be more pickup with the rural economy also picking up, which is where we believe that Ask Automobile's current valuations can be justified. And I would suggest a hold on this count.
Okay. That's a view coming in on the fundamentals. On the technicals, what's your view coming in there, Ashish? What should the viewer do?
See, if you look at on the technical side, I think Ask Auto has given a strong breakout above 500 levels. It has formed a very classic cup and handle kind of a pattern, given a breakout of there, sustaining there. So there is a possibility of short-term dip, but use that as an opportunity to possibly buy more of the stock. We can expect a target on the upside at around 600 levels. That's the pattern target. And on the downside, the support for the stock is around 485 levels.
Okay, keep an eye out on the support levels over there for the stock as well. But on that note, we're actually going to slip into a very short break. But remember to tune into the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m. Welcome back to Your Stocks on CNBC TV18. We still have with us Ashish Kyal as well as Parthiv Shah to solve all your stock-related queries. Let's move on to the next query for today then. This is coming from Shashank, who's writing to us from Mumbai. He's holding 400 shares of KPIT Tech at a price of 1,295 rupees per share. Long-term investor. Right now, the stock is trading around his buy price, just a slight bit of a loss on that front. But should he look to hold this or look to sell this one? Parthiv, which side are you on? Are you the one who's going to be saying that, yeah, IT is going to be doing well? Or are we expecting these mid-cap ITs to start, going down further? They've not done anything exciting. So where should the viewer go, and what's your view here?
We need to be very honest as an analyst. One of the worst words that I would like to hear from a management is cautiously optimistic. Doesn't give you any direction. So, but yeah, I think coming back to the mid-cap IT space, overall, we believe that this is the space which in FY26 will outperform, whether we talk of in terms of constant currency growth, whether we talk of in terms of execution, in terms of total contract value. And I think a lot of this was evident from the Q4 commentary from a lot of managements in these mid-cap IT companies. And talking of KPIT itself, I think we saw that it has grown at a rate of 15% year on year. Margins have held up extremely well at 21.1%. And more importantly, I think they did a $280 million worth of deal closures, which is, I think, a fantastic growth. The company is also inorganically looking to acquire companies, and the last acquisition, the CareSoft business, I think that should add a lot of value in terms of growth inorganically in FY26. So overall, I think we believe that this is the year to definitely hang on to such good quality run mid-cap companies, and we believe that FY26 should be a lot better in terms of performance than FY25.
Okay. Could expect better performances there going forward. But, Ashish, does it merit then to actually add some more of KPIT Tech? What would you suggest? Or should they hold, sell? What should they be doing right now, the viewer?
See, if you look at the IT sector as a whole, if we have to look at if the sector will outperform, because whether you look at KPIT or you look at TCS or Infosys, they have underperformed. But I think the economic cycle is turning. If you look at something like Stowell's pyramid, which suggests that during the falling interest rate cycle, the first sector that starts outperforming is financials. We start seeing consumer cyclicals there, and then slowly it starts picking up, and transportation, and then IT starts picking up there. So I think there is maybe a few more weeks of delay is possible, but I think IT is now getting there where the economy will start performing, and the interest rate cycle has continued that way. So KPIT, or whether you talk about TCS, you talk about Infosys, I think should be there in the portfolio. One should start nibbling now. These will be the leaders that will emerge maybe in a quarter or two, and then people will start talking about it. So it's better to start nibbling across these stocks on dips. And KPIT, again, the levels, if I have to talk about KPIT, there is a very important support for the stock, which is placed at around 1200 levels. And on the upside, eventually the stock can move towards 1500. But as I said, the cycle has to turn, which should happen in this quarter.
Okay. If the cycle turns, start nibbling. at maybe every fall is the word coming in there. You could look at it, and once everything changes, starts becoming hunky-dory for the IT sector, we could see an up move coming in there. But let's move on to the next query for today. We have Neelam, who's writing to us from Nagpur. She's holding 56 shares of Poonawalla Fincorp. Price is 454 rupees per share. Wants to know the future prospects of the stock. Poonawalla Fincorp, Parthiv, what are you keeping an eye out on here, and what should they watch out for? Is it merit holding for the long term, or maybe just a medium term outlook?
I think a lot of expectations from this company, and always a comparison with the market leader, Bajaj Finance, which is now sitting at a 5.6 lakh crore market cap. No doubt, I think so far the journey has been pretty good ever since the Poonawalla Group has taken over Magma Fincorp, the former player. And I think if we see in terms of the AUM and outperformance, I think that has been stupendous. They've grown at the rate of 42.5% year on year at the current base. And we believe that, I think, as per the management commentary, the outlook should be very, very strong. More importantly, I think we haven't seen any major delinquencies in terms of the asset quality. And going ahead, if they can maintain that, and more importantly, with the rate cut that we have witnessed, and going ahead, I think RBI also talking about further easing, that should benefit a lot of such NBFCs where, in terms of their book and asset quality, I think they have a lot of fixed rate loans, which can benefit to help them in addition of the spreads. So our senses, I think, definitely hold on to this. Next 2 to 3 years look very good for such well-run NBFCs.
Okay. And Ashish, what's your view coming in? Given that the stock has seen a good run up, right, in the last 6 months, 45% approximately is what and return would come in for the stock. So then does it merit right now, continuing to hold this one?
Yes, indeed. Because if you look at the weekly charts, I think this is one of the biggest weekly candle that we have seen since around April 2025. That clearly suggests that the momentum is only increasing on the upside, given that the size of the candle between the high and the low is one of the biggest. So that shows there is no slowdown as of now. The daily chart looks good. The stock has given a breakout. Continue to hold on over here. This can be the third wave that is going on the upside. We can expect a target of around 500 and possibly higher. On the downside, the support for the stock is going to be around 430 levels.
Okay, keeping an eye out on those levels over there. But that was the last query for today. So Ashish as well as Parthiv, sir, thank you so much for joining in with us on the show. And viewers, thank you so much as always for sending us your stock-related queries. Remember, you can always send us your queries and email us your queries on the email address that is at the top of the screens for you all right now. But with that, we'll wind down this edition and this week's edition of Your Stock on CNBC TV 18. Thank you so much for tuning in. But don't go anywhere. You have closing bell up next to take you through the last hour of trade.